What's up, guys? Welcome back to UCR Forest Academy. Once again, you are welcome back to UCR Forest channel here on YouTube. So, should in case you are coming across my channel for the very first time, my name is Uche Chemeze Richard, popularly known as UCR Forest. So, in today's lesson, we're going to be talking about risk management. I'm going to be starting from beginners level to advanced level. And this is the most important topic you should be looking for in the forex market. In fact, if you fail to understand a particular topic, my brother, you are going to know all the strategies in the forex market. Definitely, you're not going to make any withdrawal. Even if you make a withdrawal, you are withdrawing the money you deposited there. Do you understand? But if you understand how to manage your risk and how to set your risk in the forex market, you'll be able to stay profit on the long period of time, or you will be able to last long in the forex market. You should be able to understand that the forex market is packed a lot of risk. That this thing is full of risk, and you need to know how you can be able to manage your risk. This is the main trading itself. I'm begging you, this is the main trading. All I want you to do is to watch the video to the end. Watch the video to the end. Okay, please, if you are coming from my free telegram community, this video is actually specially made for you guys, or this content is actually made for you guys, because you guys have been taking my signals. Each time I drop signals here, my phone I'll be getting a lot of messages asking me, when should we close, why is our TP there, this and this. Imagine you just give somebody signals and you are receiving numerous questions. But in this particular lesson, you're going to be trying to understand. Sometimes you hear me saying, or sometimes you will see I posted 1:4, 1:3. These are something that looks like that. In today's lesson, you'll be able to understand all those terminologies. You'll be able to understand the reason why I say this is 1:4 and the reason why we are looking for 1:3. Yeah, and sometimes we make some losses, and I'll tell that we are still on profit, and you'll be doubting me, how can we be on profit when we just lost now? Yes, it's true. The matter is that you need to doubt me, but after the very particular lesson, you will stop doubting me, and you will see the reason why you have been the one that has not been helping yourself and in the very particular work trading. So I've been able to share a lot of setup here. If you have been looking for a free Telegram community where you want to be getting free setup from as in when you want to be getting free setup every week, all you have to do is to use the link on the description below and then join the very particular Telegram community. I drop free signals here every week. I drop free signals. You can see the previous week we just dropped almost like 7 setup, and we had 4 straight winnings. We have 4 winnings and we lost 3. And inside these 4 winnings we lost, we are still on massive profit. And what helped us to be on that massive profit is risk management. Is what is risk management, because I understand this thing very well, and that is the reason why I've been able to know how to reduce my risk and to return back a lot of profit on top of my risk. All right, so just use the link on the comment section, use the link on the description below, and join the free Telegram community. Okay, so I think we're going to be starting the video right away. All right, I think we have delayed a little bit, but before we start the lesson, please, I want to tell you guys, have you been looking for an online class where you want to learn Forex from beginners level to advanced level? All right, there's a number displaying on the screen. Use that number to reach out to us on WhatsApp and then to get the details for you to be part of your particular academy. Always know that we have a price for Nigerians and we have price for those residing out of Nigeria. And just the price for Nigerians are 75,000 naira. Those outside Nigeria is 80 USD. Always know that this is just like a one-time payment, and this is a lifetime mentorship. We are not going to be asking you for another money, or it's not like after 1 month or 2 months we are done with you. No, it's a lifetime access. Okay, and also you need to know that this is a private online class where we are going to be mentoring you privately, as we're going to teach you on one-on-one, because we understand that each and every of our students has the different ways they understood the forex market and has the different ways they understood things. So that is the reason why we have decided to mentor each and every one of them privately. Oh, you're asking how can we be able to do this, right? Don't worry, we have the capacity to be able to do it, because we have been doing this in the past and we can't stop. This is our mood of teaching. All right, so use the number on the screen and reach out to us. Just know that your learning is private and nobody else wouldn't even know the level you are in learning. Okay, all you have to do is to use the number on the description below, then you reach out to us on WhatsApp and then be part of the program. Okay, so now I think we have to begin the video right away. We have to begin the lesson right away. So what is risk management? We're going to be trying to understand what is risk management. Please don't forget to like and subscribe to the YouTube channel. Don't forget to like and subscribe. Leave your notification button on so that you'll be the first person to be notified each time we drop a new video. We have done numerous content in the past. Go and check so many content we have have dropped here. If not one or two could be of a massive helpful guide to you. We have different content here. So try and go and check out some of them. Believe me, you are definitely going to be happy with what you will see there. All right, let's begin right away. So, what is risk management? We'll be trying to understand what is risk management, and also we try to understand the psychology behind risk management, the benefit of strong risk management in trading, disadvantage of poor risk management, and then in the next section of the video, we'll try to understand mastering the risk to reward ratio, trading psychology. Please, I wouldn't want you to skip any of the sections. We're going to have session one and session two. It's not going to be too long. I will try to cut the video so it won't even reach 1 hour. But just know that we have a lot of benefit packed on this particular lesson. Try and watch it to the end. So we're going to be trying to understand the winning streak and the losing streak, something like a psychological battle, and then we'll try to understand knowing when to trade and when not to trade, and then the pressure that comes when you are forcing a setup. And then I'm also going to help you to understand how you can be able to grow your capital and stay on profit for a long period of time. Okay, we're going to be covering a lot on today's lesson. All you have to do is to sit back and watch the video to the end. All right, let's start with what is risk management. But before I define what is risk management, let me use a commonest example to explain a particular topic to you, so that when I start explaining some of certain things, you will not be lost. You will find it as a very interesting topic. You find out something that I need to give a try. Okay. So have you ever been approached by anybody who tells you that, who explains to you or offered a business opportunity to you, telling you that he has a business opportunity and this business is going to fetch you $1,000, that the moment you invest with just 100 USD, that you're going to make $1,000, or maybe any money in your local currency? I don't know, but I'm just using a dollar as a central currency for the very particular lesson, and he's telling you you're going to make $1,000 with just 100 USD. Now you are so happy and you want to be part of the business, but you're not. There are some certain things you are not asking. There are some certain questions you are not asking the very particular person that is offering such business opportunity to you. You've forgotten so soon that you are investing a certain amount of money and he's proposing something that you don't know whether is going to happen. You need to be convinced that this kind of thing is going to happen, and you need to know whether it's going to end in that very particular 100 USD, whether they are going to ask more money in the future. These are some certain questions you need to ask. But if you fail to ask those questions and blindly jump into the business, at the end of the whole day, your name will be sorry, because you have automatically gambled with your money. And when you lose it, there's no need to worry about. For me, there's no need to worry about, because you didn't ask those questions. But let's say that somebody else approach you and then ask and then offer a business opportunity to you, and the person tells you that we do sell PC, we sell laptop, and then we sell laptop within the country. We have up to like 25 customers, and these are the people that buys in wholesale. These are people that buys in retail. We have this customer here in so place. This person buys up to like 20 or 25 in a month. He states and gave you the statistics and the way the business is being run. He showed you all the risk, the management, and the way they have been able to manage the company, and the company has been able to last for 10 years, and look at what they have been able to return. The bank statement, a lot of things are there to show to you that this is like a proven business that is already working. Right now, I will leave you to choose between the very particular first person that approach you for business and this person that is approaching you now, that has already told you that all you have to do is to just invest $1,000, that in 6 months time you are going to make something like 6,000 USD. That this is the profit you are going to make in 6 months time, because of the way our business is being run. Now when you look at these two people, which one would you give your money, or which one will you invest? I believe for me, I will make a decision for myself. I don't know for you. Some people love gambling, right? So for me, I'm going to choose the second person, because this person has automatically shown me how the business is being run. He has explained a lot of things I need to know, and he has made things very clear to me than the second person who just proposed something that I don't know where it is coming from. Okay, so the moment I've chosen that business, I have chosen to risk that my $1,000, to risk what that my $1,000, and I'm hoping to get 6,000 US dollars in the next 6 months. This could be an interval of time, maybe a month and a month and months and months. They'll keep paying me till that very particular period. So now, when we will now take that the same mindset, or that the same knowledge, or what, or this very particular example to the definition of risk management, which the definition of risk management is the process of identifying, assessing, identifying and controlling a financial risk in the trading, a financial risk in trading. Let me come again. The process of identifying. Now, the moment the first person came, he offered a business opportunity to you. It is late for you to find out. I think the another way for identifying is like you want to find out. You want to make your investigation. When these two people has approached you, you might tell them, okay, fine, you need to go back home. Maybe I will reach out to you and I will tell you the business I'm interested to join or I'm interested to invest my money in. When they go back home, then it is now late for you to find out. It's either you Google or you search or you make your findings or you reach out to anybody asking how do you see this thing, or is this thing profitable? This kind of thing. When the moment you are doing all these things, you are trying to identify, you are trying to find out the pattern of that business. And when we talk about the word assess, assess means that you are trying to work to assess whether you are this very particular business can be of a good to you, or whether it can actually suit your psychology or the way you operate or like the way you manage things. Okay. And then when we talk about the controlling your financial risk, then you are trying to know whether when this business start running, can I be able to control my financial risk? Can I be able to control the money that I've invested? Can I be able to tell them in a period of time that I'm no longer interested in this business? I need my money. I'm no longer interested. Would they be able to give me this very particular money? If they fail to be able to give you that, that means there's a problem. So when you look at this very particular three word, which I said earlier, I talked about the word identify, and then I said another word. I think I mentioned the word assessing, and then controlling. So these are like three words I actually use to define risk management, which these are something that you need to take to the Forex chart. Now let's say you funded your account. Immediately you sign up with a broker, you heard, okay, you came across any social media post, you saw what they are displaying to you, and it looks very attractive and very interesting, right? Or maybe you saw your friend doing something very great on the chart, and then you told yourself, okay, I can be able to do this thing. And at the end of the whole day, you funded your account and then you opened a trade only for you to lose your entire capital on one single trade. You see, that means that your risk management is very, very poor. And then you need to understand what is risk management. Okay, that means that you have struggled to understand what is risk management, or maybe your risk management is so poor. So let's say you're also the type that whenever you open a trade and the market is running in your favor, at the end of the whole day, you see that you made a profit. The next day you will lose. The next day you make profit. The next day you will lose. The next day you will lose. And at the end of the whole day, you find out that your profit is as small and your losses are too big. That means your risk management is so poor. And there's some certain things you have not been able to identify and assess. And let's say that very particular moment you funded your account and then you opened your face trade with a very big lot size. At the end of the whole day, the market start going against you. Maybe you have told yourself, I don't want to risk more than 10 USD on a particular setup. Now you are risking, now the market is going against you at around, let me say 30 USD, minus 30 USD. You are not going to find it funny. And if you're not able to close it, that means you have lost access to your financial risk. You have lost control to your financial risk. So that is why you need to understand that the risk management is very, very important in the forex market. The goal is to enable you to minimize your risk and to maximize your profit so that your profit can be more than your what can be more than your risk. It involves position sizing. When I mean position sizing, I mean lot size. When I mean the word position sizing, I mean lot size. So lot size is one of the most key things that can enable you to practice a good risk management. I know by now some of you will not even want to watch the video again because you have seen that there's something that you already know. Calm down. There's a lot of things I want to explain to you. All you have to do is to watch the video to the end. Okay, so we have lot size, right? And then we said it involves position sizing. When you hear about the word position sizing, it means lot size. Then it also involves stop loss. For you to practice a very good risk management, you need lot size, position sizing, a good knowledge of how to use the lot size, which I'm going to explain to you, and a good knowledge of how to use the stop loss, which I'm still going to explain to you, and then take profit, and then finally risk to reward ratio. And then finally, risk to reward ratio. So these are certain things you need to understand risk management. You need a lot size, you need a good knowledge of a lot, how to use lot size, stop loss, take profit, and then risk to reward ratio. Risk to reward ratio. Now let me explain what is lot size. So in the forex market, we have different type of lot size. We have a particular lot size which we call a standard lot size, mini lot size, and a micro lot size. So there's a particular lot size you could use. If you use a standard lot size for a certain account, there could be a tendency that you might lose that account in a few minutes or in a few seconds because of how big the lot size is. Now, let's say you funded an account of 100 USD like this. You have an account equity of 100 USD. Let me bring the very particular thing here. You have an account size of 100 USD. This is your trading capital, right? This is what you funded. You have account of 100 USD. Then when you funded that money, you told yourself that I'm not going to risk more than 10 USD. Anything that will make me to lose more than 10 USD per trade, that I'm no longer interested in it. Now, this is what you have actually, this is the decision and this is your trading plan that you have already taken. All right. So for you to be able to know, or for you to be able to keep to that very particular $10 per trade, that means you need to understand how to use the lot size and how to use take profit. Okay. So now when you need to understand how to use the stop loss, how to use the lot size, sorry, and how to use the stop loss. So now the next thing you need to ask yourself is, what kind of lot size should I use that's going to enable me to lose that very particular amount of money? That's the next question you need to ask yourself. The fact that you have already said that thing in your mouth, you have already admitted or you have already written it down that I'm not going to lose more than 10 USD. You need to know the particular lot size that can enable you to risk that amount of money. Now, let's say at the end of the whole day, let's say at the end of the whole day, you say, okay, fine, let me go in with one lot size, and then your stop loss is 20 pips. Your stop loss is 20 pips like this. This is your stop loss. Is when you have done that analysis, you discover that your stop loss is 20 pips. You have set the pending order. Then the next thing now you say, okay, what kind of lot size should I use? Say, let me use one lot size. Then one lot size is the lot size you have chosen, right? And then you need to understand that one lot size, one pip move in one lot size. That is one, two, three, one pip, just like one pip that increase in one lot size, that is in one lot size, is what is $10, is 10. That means what I mean is one, two, three, three, like this kind of thing. Now the moment you enter the trade with one lot size, the market increase one, two, three. That is what $10. That is what it means. So that means one pip in one lot size is what is $10. That is value per pip is what is 10 USD. Now if you check it now, if you enter that trade and at the end of the whole day this thing start going against you, this thing doesn't even need to hit your stop loss, because the money that you are going that the money you are now risking is what is 200 USD. This is your risk. Imagine you funded 100 USD and now risking 200 USD. This thing doesn't even need to get to your stop loss before blowing your account. So this is because you don't know the right lot size to use on that very particular account, and that is the reason why you have been able to blew that account on a single trade. But when you ask yourself a question, okay, I have 100 USD as an account, what kind of lot size should I? Would it be a particular strategy? All you have to do is to play around in the middle of the particular what? In the middle of the particular strategy. Here I wrote one lot size. All you have to do is to start reducing the one lot size. You could reduce it to 0.1, 0.1, which is mini lot size. And then this mini lot size, I think 0.1 times 10, this thing 20 times 0.1 times 10, this is supposed to give you 20 USD. You see, this is not mathematics. This is something you can be able to do off head very, very fast. You can be able to do these things what off head. Now, this is now 20 USD, and this is still above what you intend to risk, right? So now this time around is for you to keep reducing it. So when I reduce it to 0.5, this now going to be my risk will now be 10 USD, right? You see that my 20 piece stop loss has been able to what? Has been able to make sure that I did not lose more than 20, I did not lose more than 10 USD. I think my loss size made sure that I did not lose more than 10 USD. Your stop loss can be as wide as you care, as wide as you want. But the truth of the matter is that if you fail to identify the particular loss size that you have expected to use, so that that very particular wide stop loss will not accumulate a very huge amount of money. If you fail to identify that, you might bleed the account. Okay. Now, so since we have been able to see the lot size, now we now want to be able to know how much do we want to gain, how much do we stand to gain? Now you might tell yourself, if I risk $10, I want to gain like 30 USD. I want to make sure that I return like three times of the very particular 30 USD. The moment you are saying this is mean that you are a good businessman, because you can't risk something and then you get half of what you risk. That is so bad, bro. You can't risk $10 now and then you see just $15, you close it. Are you stupid? Is something wrong with you? If you keep doing that in a long period of time, you're gonna have a problem. Okay, you're gonna find yourself in a terrible condition. You don't need to do that. You open something with 10 USD and the market just move a little bit and you're now seeing like 15 USD. You forgot so soon that you risk you risk $10. Don't worry, I have a session where I'm going to explain that very particular part. Okay, so the moment you risk 10 USD, now you're expected to make what? You're expected to make like double of it or three double of it. Now, let's say you now target 60 pips, because the moment you have risked 20 pips, you need to target 20 pips times three. Okay, 20 pips now, 60 pips. I think 20 pips times 3 will give you 60 pips, right? And then this times this your loss size you have already chosen, and then times 10. That should be able to give you $30. Can you see now? So the moment you have done this thing, you have been able to see the particular loss size that you expected to use so that you can be able to risk that very particular amount. So there is a problem that normally happens to we traders. There's a problem that normally happens to we traders. Before now, let me tell you to the honest truth here. When I was actually learning this forex, I thought it was all about buy and sell. Though I stumbled on many topics about this risk management, but the truth of the matter is that I did not really focus on it because it was very boring. It was very, very boring for me to even sit down to start listening to. Okay, but I never knew that this is the real trading. Today I will make profit, tomorrow I will lose, next tomorrow I will lose. So I didn't realize. I knew my strategy was really working from day one, but I cannot be able to keep profit. All right, so on risk to reward ratio, on every particular risk to reward ratio, we will try to understand the reason why most traders fail to be on profit for a very long period of time. Okay, now let's talk about this very particular stop. Now let's explain the very particular part where let's explain the very particular part. You enter the trade, and let's say you went in for a buy around this zone. Let's say you went in on a buy around the very particular zone. Your stop loss is below the very particular place, and your take profit is above here. And let's say the market starts going in your favor like this. The market is now moving in your favor. You are smiling. The market is pushing massively in your favor. Now the price is now returning back. Price is now returning back. Such that price returns so fast to your entry. Now the truth of the matter here is that if you are on profit and you don't want to hear that I was on profit and later on I started running on losses. There's something we call trailing stop loss. There's something we call what? Trailing stop loss. I think they call it trailing stop loss, or you can call it break even. Okay, let's use the word break even, a very famous one. Everybody know break even. You get this very particular break even will help you secure your capital. Now you are on profit, right? You're on profit, and then you don't want to hear the word that I saw a profit finish, and at the end of the whole day, now I'm lost. Now there are two ways to do this thing. You can decide to try your stop loss to break even, or you can decide to take your stop loss or to cover up some money. Do you understand? Some profit that you have already made. How do you do that? All you have to do is to copy in that way particular break even. Look at how it works. This way particular break even works this way. If you are already on profit, right, and the market is pushing well in your favor, and then you want to lock in your risk, you want to lock in your capital, you don't want to hear that I was on profit before, now I lost everything. No, the thing you have to do is to copy the price of this your entry point and set it as your stop loss. And set it as what? And set it as your stop loss. Copy the price of this your entry point and set it as stop loss. Or you can just click on MT5 and drag your stop loss to your what? To your entry point. That means that if this market reverse and hits your stop loss, you are not going to lose anything again. You're not going to lose what? Anything again. You're not going to lose any money, and you're not going to make any what? Money. But let's say that you want to lock in some part of the profit that you have already made. All you have to do is what? Is take that your stop loss, drag that your stop loss like this on MT5, drag that your stop loss to maybe to somewhere around the zone, to somewhere around the particular part. That means that as it stands like this, if this market decide to keep pushing to the downside, the moment this market hits here, the market will tag you out. That means you only took the profit of the particular little place. You only took the profit of here. Look at the place you only took the profit. You only took the profit of the very particular little place. That is the only profit you took. Okay, that is the part you say, I don't want to hear that the fact I saw money finish, and then at the end of the whole day, I did not see any money. But I love doing this thing the moment I hit like 1:3. I'm going to explain that on the risk to reward ratio. Okay, I'm just trying to explain to you how to use break even or trailing stop losses. Okay, and then another thing you should never do on when you are practicing a good risk management is, let's say the market is pushing in your favor like this. Let's say the market is pushing in your favor this way, and now the market is pushing in your favor like this. All of a sudden the market start going against you. Now the market is now in your stop loss. Now the one thing to do now is that never you extend your stop loss. Never you do what? Never you extend your stop loss. The moment you extend your stop loss, you are standing the chance of risking more than you will bear. And remember that before you went in for the very particular setup, your stop loss is already 10 USD, which you have already made as a decision in your trading plan. And now if you start extending this stop loss like this, if you start extending this stop loss like this, the market start pushing down against you, you start extending this your 10 USD will no longer be 10 USD, but it will now be something like 20 or 30 USD. And if finally this thing hits your stop loss, you're not going to be at rest. It is going to pain you. It is going to work. It's going to pain you. And at the later on a particular lesson, I'm going to tell you what you are going to do the moment this thing hits your stop loss, because there are certain things you are going to do actually. Okay, please never you extend your stop loss. What if this thing is going your direction and the market is fastly approaching your TP? Never you extend your TP telling yourself that I want to make more. No, keep your TP. Have a realistic take profit and have a realistic plan. Okay, because the moment you start increasing and decreasing it every time like that, that means you are going to suffer. A time will come you might extend it, you will never get there. And one of the most painful part of it is that if this thing has hit your first take profit, because you were extending your stop loss and this thing came up and reversed with speed, with speed. Some of you will never close every particular setup. Some of you will never close it because you once saw a very big amount of money and now you are seeing something lesser than it. So you'll be telling yourself that this market is going to go up. You are encouraging yourself, you are giving yourself some belief it's going to go up. And if it didn't go up and went against you, this is the part you are not going to find funny. And there are certain things that is going to happen to you. Okay, please, I would advise you never to do something like this. So I will be trying to explain what is risk to reward ratio for you to understand how risk to reward ratio will enable you to be on a profit for a very long period of time, and how this thing can danger or can destroy your risk to reward ratio. And you will see that you will continuously depositing without not making any withdrawal. All right, let's explain risk to reward ratio. Now you made a decision, you are not to lose more than 10 USD. That is a good decision, right? That's a good trading plan. And then finally, in risk to reward ratio, there's something we call okay, let me explain this way. Risk to reward ratio means that the moment you risk something, you are expected to make at least double of it, or more than of it. You are expected to make like two times of it, or three times of it, or four times of it. Now we have different types of risk to reward ratio. We have some traders who target 1:1. We have some traders who target what? 1:1. We have some traders who target 1:2. We have some traders who target 1:3, 1:2. We have some traders who target 1:3. We have some traders who target 1:3. We also have some traders who target 1:4. Like for me, I target 1:4. That's my risk to reward ratio. Okay. So now look at how you can be able to understand this very particular risk to reward ratio. Meaning that the moment you reach $10, you are expected to make double of that $10. It is either you reach $10, you are targeting to make like 20 USD or 30 USD. Now let's say you have a trading team, or you have four friends that trade Forex, and the four of you trade the same setup, take the same entry, right? And then the first person, which is this person, this is Mr. A. The Mr. A actually, let me use a capital letter. So this particular Mr. A is actually using a 1:1 risk to reward ratio. He uses 1:1, right? 1:1 is his risk to reward ratio. He doesn't want to risk more than 1:1, and his trading capital is 100 USD. Now remember that both of you are risking 10 USD per trade. And now this time around, he was able to make a profit of 10 USD. Like this, he was able to make a profit of 10 USD. Now his new capital, or his new balance, will now be 110 USD, 110 USD. This will be his new capital, right? Then the second person, which is Mr. B, who is using the person is using 1:2. Then the moment the market at he still has a capital of 100 USD actually, and then the next one is that he make a profit. You know that he's not going to make a profit of 10 USD because he's not like the first person who is risking 1:1. Because the person that is risking 1:1 is risking $10 to make $10. But this person that is risking $10 to make what? Double of it. Now his profit is now 20 USD. Now the very moment this market start, the very moment he closed the market or the market hit his take profit, this time around he's on profit of 120 USD or like 120 USD, right? Then the third person there is using 1:3, and then this time around he has a capital of 100 USD, and at this time he made a profit of 30 USD, and on his new balance will be 130 USD, 130 USD actually. And then the fourth person who uses 1:4 is now targeting still has 100 USD, and then he made a profit of 40 USD, and now this is his capital, right? This is his trading capital. Now, when you look at all this whole thing, now you will see that these profit are not the same. These profit are not what are not the same. One person was able to exit the market very early. The second person was able to exit the market like a bit early, and the third person there existed the market in 1:3. The fourth person existed the market at 1:4. Now, on the next session of the video, I'm going to be trying to explain to you guys the how this particular risk to reward ratio can enable you to stay in the forex market for a very long period of time, and the effect and the effect or like the advantage and disadvantage of a good risk to reward ratio. You're going to be trying to understand how this thing can keep you going even during your winning streak and your losing streak. Okay, for now, we're going to be stopping every particular video. Please don't forget to leave a comment below. Drop your questions. Ask me your questions. Definitely, I'm going to answer your questions to you. Okay, if you have anything that is confusing you on what I've explained on any particular session, please ask it on the comment section, and don't forget to like and subscribe to the video. Try to share the video. I'm begging you, please try to share the video. If you have truly understood something on any particular lesson, try to share the very particular lesson. Okay, please, on the next section of the video, we are going to continue from it. All right, thank you, and may God bless you.